Yo everyone, hope you guys have a nice weekend. Welcome to the Savvy Mind. In this YouTube channel, I'll be uploading more videos on how I analyze the stock market as well as learning on strategies on how to save in a high inflated environment. Hope you guys will have some insights of the current market situation after seeing my today's video. So let's go! Basically, why the market tanked last week, main reason was because of the Russia and Ukraine escalated war. We saw videos of Russia firing over at Ukraine nuclear plant. If you are new and wondering how does it impact the world, well, it creates a nuclear threat to the world as Russia can easily nuke down the entire town with the amount of nuclear warheads that they currently hold. On Saturday, Russia declares to have a limited ceasefire over at Ukraine. But 5 hours later, Ukraine noted that Russia started firing again. So how does this war affect the overall stock market? Well, Russia is a major producer of commodities, everything from oil and natural gas to palladium and wheat, while Ukraine is also a major exporter of wheat as well as neon, in which this will actually further disrupt the supply chain issues that we currently have. And as you know, stock market does not like uncertainty. Now let's take a look over at the oil chart. History stated that 6 out of 8 times when oil spiked over $50, the market normally will sink into a recession. The only two recessions that was not affected by the price hike of oil, right, was the 1986 and the COVID-19 recession. So the question will be, do you think our market is undergoing on a recession now? Or are we not in a recession? Moving forward, Jerome Powell testified to the Senate last week that he will highly possibly doing a rate hike of 25 basis points due to the escalation of Ukraine and Russia war. The Fed is not alone in its plan to raise interest rates from their current levels. We also have other countries such as United Kingdom, Russia, South Korea, as well as Brazil. And looking ahead, Jerome Powell stated that the Fed expects inflation rate to decline over the course of the year as supply chain constraints ease. And he are attentive to the risk of potential further upward pressure on prices, as he cautioned. However, that the invasion of Ukraine and sanctions imposed by the Western countries create a great deal of uncertainty around the price of wheat, oil, and other goods. So the near-term effects of the US economy of the invasion of Ukraine, the ongoing war, the sanctions, and other events to come remain highly uncertain. That's what he stated during his semi-annual testimony to the Congress, and he is monitoring the situation very, very closely. Moving on, this is the yield curve itself. So currently we are sitting over at 24, and history shows that when we hit 0 over here, which is the red line indicating, it will show that we will actually sink into a recession. So following on, we actually see ourselves in the COVID-19 situation over here. Then the famous Lehman Brothers recession, then the dot-com bubble recession, etc. So we are currently now sitting over at 24, and this yield curve is a very good indicator of a recession. So without further ado, let's move on to the SPY chart. So now we are at the SPY daily chart. So the SPY daily chart is showing some point of a bearish trend, as you can see on the light purple line over here. I'm seeing that the SPY will actually continue the bearish trend. As you can see, there is a depth cross pattern coming up very soon, which is the 50 MA touching the 200 MA. Yeah, so I'm foreseeing that the market is going to be bearish in the short term. Yeah. Okay, let's move on to the monthly chart over here. As you can see, the SPY right is having a hanging man candlestick pattern over here, which symbolizes that it's actually going down to the bearish side. as you can see over here at the yellow line over here, which I mark over, and we can see that the yellow line actually touches the 380 range. This actually symbolizes that I'm seeing how low, right, that the SPY will actually go if let's say we are going into a recession, a potential recession. Hopefully we are not going there, because if let's say we are already going into a recession, right, a lot of business will be get affected heavily. Yeah, so you might be wondering whether is it a good time to actually buy in currently. Actually, I would not say it's a very good time to buy in, but if you are scared, right, that you miss out on the reversal, upward reversal, you might actually want to put in a 30% entry, right, onto your stocks. Yeah, so in the event, let's say you really move up to the V-shaped recovery, being a V-shaped recovery as you can see over here, then at least we all know that it will actually go all-time high. So technically, right, we still profited, right, in going upward towards the upwards during this V-shaped recovery, and we can always add in, as we know that after a correction or a recession, right, we always will actually break the all-time high. So as you can see over here, despite the all-time high, right, is actually at the 480 range. Yeah, so right now in the market, please remember to stay safe and stay focused, and please do not FOMO in. Yeah, so do not all in as well. So we shall see during this market outlook as well. So stay safe and stay healthy, everyone. Thanks, and please do like and subscribe the button if you like this video. Thank you.